Hello guys and welcome once again to my YouTube channel. I hope you're excited about this particular video. So in this particular video, we're going to talk about US30 using the same strategy that we talked about in the previous video. In our last video, where we talked about GBP as I analyzed and showed you the opportunities that you're supposed to take advantage of throughout the almost for an entire 3 months from October all the way to the rest of the year. So most of you, once you get hold of this understanding that we're trying to give to you, you'll see yourself that your the way you start to perceive the markets will change, and also your entries and exits will change, and also your trading account balance definitely tends to change if ever you get this understanding. If ever you get this understanding, obviously it's deeper than this, but this is something that once you are introduced to like this, it's going to help you in a huge way. So I want to show you something that is so profound that let me just do this. Let me just close this like this. Right. So this is US30. As you can see, I'm on the weekly time frame, right? So all of this was simply an adjustment like that, or a market structure shift, whichever way you want to call it. Same thing with this one as well. Adjustment. So what you need to understand is you always start to analyze from the higher time frame, which is top-down analysis, right? So that top-down analysis, you are doing it at an institutional level, identifying the institutional flow of the market. For example, here, we're in a bullish order flow market, meaning after breaking this structure, the market kept on going internally with this high highs, high lows, high. Then there where it did a shift. That's how you know that we now have a swing leg. That's our swing higher high up there. This was our previous higher high. This one was our higher low, like this. So basically, once they have induced like this, that's when you know that they are going to start falling. The purpose of that fall, the purpose of this falling is simply to facilitate a pullback so that they continue. So in this case, this pullback, we have a zone here. We have a zone. That's an institutional zone there, right here. So that was my first zone of lookout where I was anticipating them to pull back into before they continue up. So even here, there was also another zone down there, but that my first major zone was up there. So that's a pullback. Then after the pullback has ended, how do you know that the pullback has ended? Once you go to lower time frames and analyze that internal structure, once you see that internal structure shifting from bearish order flow to bullish order flow, that's how you know that the pullback has ended. Once the pullback has ended, the market will go all the way and take out that high, right? So this understanding that I'm giving you, this is the same understanding that institutions have. After they've completed a move like this, they can wait for the market to shift like this before they jump out of those buys that they've been holding, right? So now, same thing here. If they're going to enter this continuation buys, they're going to also wait for that shift of order flow. Order flow must shift before they jump into that buy. So even this coming down here, this movement to the downside, they also harnessed and took advantage of that that opportunity to the downside, right? This opportunity all the way from January 2022, all the way from January 2022, because when you look at it from the daily like this, when you look at it from the daily, if you're looking at it from the daily perspective, you will realize that the daily perspective, we changed character there according to the daily perspective, right? We had a change of character there. After the change of character, market came back to an institutional zone. So after tapping this institutional zone, you're supposed to start selling from there. So meaning another thing also, you will realize that this sell that you would have taken there, you would have targeted this zone. Why this zone? Because that's our first major zone according to the weekly. According to the weekly, that's our first major zone. All these other zones that you're seeing, this one was mitigated, this one was mitigated. So our first unmitigated level was this one. Meaning, if ever you entered those sales there in January 2022, and after this confirmation, obviously, entering those sales in January 2022, you could have held this trade all the way to September. Imagine January, February, March, April, May, June, July, August, September. That's like 9 months of holding a trade. So someone might say, is it possible to hold a trade for 9 months? Definitely it's possible. That's what we call positional trading. Positional trading is whereby you can hold a trade for months and months and months and months. So that was where your first major trade was, right there. After this change of character on the daily time frame, right? After that major change of character on the daily time frame, your first major sell was there. So even if you want to swing, it's also you can also swing. You can also swing even if you want to swing, whereby you're not looking at, you're just looking at these short-term legs, right? You can look at these short-term legs. That is if ever you just want to swing, whereby you enter, you come out maybe after some few days. So that's where they had a break of structure. So they were now going. This is a weekly inducement, right? This is a weekly inducement. They induced as you saw. So let me just remove it so that we see clearly things there. So you realize that after breaking this structure like this, the same thing, you wait for an inducement, wait for an inducement. Where's the inducement? The first, that pullback there, once they take out this pullback, it means they have made this a lower low because they are now going, if they are now going down, they will follow and respect bearish order flow all the way to the downside. So you mark after an adjustment like that, they tap into a significant supply or or order block just there. So that was the order block there. That was the order block there. In this case, the swing was more bigger. You would have held all the way to here. So you can swing, you can even position trade. Institutions, they can even hold all the way to those levels, like what I'm telling you now, up until order flow changes. They can even hold their entire trades up until order flow is changed. That's how you maximize on opportunities. This one was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Almost 2 weeks of holding here. Here it was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Almost 2 weeks again there of holding, which is still profit. Imagine 2 weeks of holding one trade in profit. 2 weeks of holding one trade in profit. So same thing here. Where did where do we see this was the last leg? They didn't take out the last leg. They came here, they took out this previous leg. That was our inducement in that case. After the inducement, they tap into a zone. They tap into a level, they tap into a zone. In this case, I can see that we had this whole zone is our supply zone, right? This whole zone is my supply zone, but I'm just gonna mark it like this. I'm just gonna mark it like this. I wanted to mark this whole block, but no need to do that, but I'll just mark it like that. So after inducing like that, tapping into a zone. So someone is wondering, so do we enter on the daily time frame? No. You don't need to enter your trades on the daily time frame, the weekly time frame, the 4 hour time frame. Those time frames, they are for your setups, your structures, and your analysis. Once your setups, your analysis, and your structures they are established, you go now to lower time frames and get all those entries. So all these entries were entries that were so much available to you. So here you could have been taking this is how you're supposed to be taking these sells to the downside. Someone now might ask, how then do I take these buys? These buys as well, we have a technique of entering these buys because what we know and understand is that after every major break of structure like that, the market will come and take out the adjustment before they go and continue that in their particular that direction, right? So in this case, you could have bought here targeting the adjustment, or even the level above the adjustment, right? So when you go down to lower time frames, you see that it's more clearer, more clearer there. Even on the 4 hour as well, you can even enter your swing positions there on the 4 hour time frame. 1 hour time frame, you can enter as well. 30-minute, 15-minute, you're there, you're just going to refine your entries. But mainly your analysis and your setups, they will be here on the higher time frames. So in this case, if I were to refine this block according to 4 hour, it's going to be this level right there, or even this one. So if ever it's that one, it means this is how you're gonna enter. The stop loss just above there. That was how you're gonna enter it right there on the 4 hour time frame. So you just identify your zone on a higher time frame, like the daily, like that. After you've identified your zone on a higher time frame, like the daily, like that, all you now need to do is to come down to a lower time frame and look for a zone within that major zone that you'd have drawn in a higher time frame. Then you just draw like that. So this is how you could have entered this part, this cell. So even if you go lower to 1 hour, 30 minutes there, you can just get a refined entry. But basically, this was the trade day, February 2022. That was where the first major confirmed buys were entered. So all this concept of trend lines and all that and all that and all that, that is just uh those are things that are easily manipulated. Like for example, this is a trend line, right? You could have sold after the breakout of the trend line, targeting the change of character, right? But then this cell is much more confirmed in the solid cell more than this cell, right? Because this one it was before the major change of character. So trend lines are always going to be manipulated each and every single time. That's why you see even after breaking trend lines, sometimes again the market will continue in this particular direction. This is a trend line. Broke the trend line, someone might have thought it's now going down, but it kept on going up. So an understanding of if all you know is trend lines alone, if all you know is trend lines alone without an understanding of structure, you will realize that you'll be so much disadvantaged because so many times the market will manipulate you. Only those that understand structure, market structure at an institutional level, are the ones who are immune to the manipulations of retail traders, the manipulations that retail traders face. People with an understanding of uh, institutional trading, institutional market structure, those people are the people that are prone and that are not at a not that are immune to the manipulations of that retail traders experience. So remember, I showed you how you could have entered the cells. Then the buys, I said all you're targeting is the inducement. For example, in this case, the inducement in this case, it was simply this level here. So after tapping the inducement, they look for a zone, then they drop. Right. So the buys, all you were supposed to do to enter the buys, if you notice, yes, they're coming down, coming down, coming down, coming down. Then here they had a change of character right there. Let me see if I can go back. January 2022. Let me see if the 1 hour is going to permit me. If the 1 hour is going to give me that data in January 2022. Uh, right. So here it is. Here it is, January 2022, right here. So this is January 2022, as you can see. So January 2022, the market was coming down, coming down, coming down. Then there where it changed now. This change, or someone can call this an adjustment. Yes, you can call that an adjustment, but that adjustment, it made this a lower low. Once you now have this lower low, the market must go up, right? So it must go up. So meaning after this, that's when you would have even started taking. So it came down, dropped the first time, went up. So upon going up there, how would you have known that we're now going up when it now started to give these adjustments to the downside like this? Once you have an adjustment to the downside like that, that's how you now know that we are now shooting up. So here you could have even started by immediately after this adjustment, you could have looked for a zone. For example, here they'd mitigated this supply, so there was no need for them to come back all the way down there. So here, this weak rejection here is also a zone that is considered a supply zone actually. So there you could have actually entered your buys right there. Right there, you could have actually entered your buy positions right there. This was in January 2022. Last year in January. This was last year in January. This was the trade that you could have entered. First trade of the year was actually from January 2022, which was 27 January up until it was almost a week of holding that particular trade. So you could have even held it all the way to the zone up there, right? Because these levels would you would have drawn the money on a weekly time frame, on a higher time frame, which is the daily and the and the and the 4 hour. So you could have targeted up there. Then the cells were now coming down with them. You know, enter the cells on that zone that you would have drawn, right? You now enter your cells there. You now enter your cells there from that zone like that. So even if you go lower to 15 minute, whatever, once you go to 15 minute, 30 minute there, that's where you will see the clear shift there to confirm that entry there. I can even see it on the 1 hour, but even though it's showing in a very, very small way, I can see a change there. They changed character there. after they changed character, then they came and tapped that supply. So that was a confirmation now. This was a confirmation, meaning that was a confirmation for those cells. You would have entered there, stop loss above, then TP, previous break of structure like this. You see? Same thing with this next buys. After this major break of structure, you identify your right time frame inducement. Your right time frame inducement, once you know that where is your inducement, where was our inducement? After breaking this structure, our inducement was here on the daily. So meaning if you're going to take any buys, that's our first target. Our next target is always the supply zone or any other zone of significance above that zone, above the inducement level. So meaning after the break of structure, you're gonna enter these buys again to the upside. But how could you have entered them? Same thing. We are coming down, coming down, coming down. Nicely, we're coming down here. As you can see, we're inducing. That was an inducement. Then they came here, they broke structure. They were moving down nicely. They were moving down nicely. They were moving down nicely. Then right here, they also did an inducement. Then they broke structure there. Then right here, they established a change of character right there. So after that, after this change of character, all you're waiting for is for the market to drop into a zone of significance, which is an extreme supply, not only tap into a zone of significance, but also come and take out the inducement. In this case, this was our last leg. This was our last leg. The same movement that I'm anticipating on GU is the same movement that you're seeing here. Almost the same. If ever you watched our last video yesterday, this is the same movement that I'm anticipating on GU, whereby we broke structure. We broke structure like this. We left this leg here. We are playing around. It's still playing around within here, still playing around here. Then I said, oh, they're going to take out that adjustment and tap into the untapped demand. Then they fly. So this is something that once you know and now understand, you become so dangerous on the market. You become so dangerous. So even here, after tapping the zone, if ever you want a refined, if you want a refined entry, same thing. After tapping the zone, you want to see the same confluences. After tapping the zone here, you can see that they changed character right here. They changed character. After changing character, they came back here. Then they went up, came back again. So meaning they were now respecting this order block. So any entries that you entered there, you could have even any buys that you, no matter how aggressive you could have went in, your stop loss is just safe below that zone like this. This was how you could have ended. So this target, this is a short-term target. But us now of understanding, we can even target all the way to the adjustment and even stretch beyond the adjustment, go above the adjustment a little, targeting the supply there that is above the adjustment zone. So even if you targeted the adjustment like this, that is still a lot of money. That is still a lot of money. That is, trust me, that is still a lot of money. 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 So in this case, the market is now in a moving in a bearish order flow. As you can see, that's our lower high, lower low. Our lower low is this one. So they came close to the lower high, which was also a region of which was a supply zone that you saw on the daily. They tapped in the supply, then they started to drop like that. Simple entry that you could have entered easily like that. After you enter there, your stop loss is below here. They are not supposed to break that lower high because they are still bearish, right? They are still bearish. They are still bearish. They are still going down. You see? This is how you could have entered that buy. Same thing with these other buys. You'd have also done the same thing. You would have also done the same thing. Same thing with these other buys here. You would have also targeted the adjustment, which is here. That was our adjustment. After tapping the adjustment, expect them to tap a next zone that's above the adjustment. So in this case, even this buy is here from June 2022. You see, so these major opportunities and these major setups, once you now have an understanding, once you're understanding, once you improve your understanding of how to enter those major entries and make sure that so here, they changed character right there. They came established that leg up there, right? Then where was our inducement? Our inducement in this case, it was up there. There was a break of structure there. break of structure, you would have even ended on this order block. Change of character induced, then liquidity in form of equal laws. These are equal laws here. You can also see other equal laws right here. This was all liquidity that the market had generated. Once you see all of that, you just look for a zone that is below the liquidity zone. There you would have bought here. Buying here, you're targeting the inducement leg. Inducement leg is up there because you know that once they change character like this, once they change character, it means we now have a new lower low. Change of character there simply means we now have this as our lower low, meaning we now have to go up. Going up, we now have to go up beyond the inducement level, meaning you would have targeted the inducement or even gone beyond the inducement. After that, they tapped into a zone. That was a zone that they tapped onto. You can actually see most of these zones, you can actually see them clearly when you're on a higher time frame. When you're on a higher time frame, you can actually easily see these zones because the lower you go, the more noise the more you start to experience noise on those levels there. So even after entering here into this zone, you could have even seen a shift on a lower time frame, 15 minute, 30 minute, you could have even seen a shift there, right there on that zone. So these were the entries that you were supposed to take from January 2022 up until September, almost January, February, March, April, May, June, July, August, September, 9 months. Imagine for the 9 months you sold there, you bought there, you sold there, you bought there, you sold there, you bought here, you sold again there. Maximizing on all these entries. That's a lot of money, trust me. So the most important thing is for you to always make sure that your analysis on the higher time frame like this, it's at your fingertips. Your higher time frame analysis, make sure that it's always at your fingertips. That higher time frame analysis is so key because the lower time frames, as I said, they carry a lot of noise that if ever you're not careful. So even here, where's our inducement? Our inducement is this one. If they go beyond the inducement, they mustn't come and take out this one because once they take this one, it's a major change of character. Once we have a major change of character, it means our pullback that we saw on the weekly, it has now ended. If our pullback has ended, they now have to come and take out this high up there. So this was the analogy. You would have bought again, targeting this inducement leg right there. This understanding that I'm giving you is actually forbidden. Forbidden to give. It's forbidden. It's not allowed. It's an understanding that is not even allowed to be shared to the public, to retail traders. An understanding it's not even allowed. I'm being honest with you. It's not allowed what I'm doing. It's not even allowed. So here, they induced here. After inducing, you're just following structure. Then they broke structure. Then they changed character. After they change this character, you know that they're going up. Then the going up, you target the inducement. In this case, this is an inner change of character. So you're targeting the inducement leg up there, which is the daily inducement. That inducement, the only way you would have identified it was when you went to the daily time frame. If ever you were on these lower time frames, 15 minute, 30 minute, you're never going to see that inducement up there. You're going to shortcut or leave a lot of money hanging in the air. You would have entered there or even here on this extreme, supply. This one it was a higher probability entry. There you can even go aggressive as much as you want. Then you would have stretched your target all the way to the inducement like this. Once you stretch all the way to the inducement, look at this. Beautiful. Beautiful, 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 beautiful. Right? So the higher time frames, they are so key because there's so much information that you won't find on the lower time frames. Because the lower time frames, they have a lot of noise. Too much noise that once you fall into the trap. So in this case, you would have even followed through that trade. For example, this was the previous leg here. This was the previous high low. So long they didn't break the previous high low, you would have even kept on holding these buys. Just shifted stop loss maybe just a little bit lower there. So it means you could have held if you're just following structure. After they broke there, you could have shifted here. They came again, they broke there up until you realize that if ever you followed what I'm saying, this was actually a 1:50 risk to reward. Imagine 1:50 risk to reward ratio. This is 1:50. Look at this. 1:50 1 is to 49.5, which is almost 1 is to 50. Risk to reward. If you risk $10, you're going to make times 50, which is 500. If you risk $100, you're going to make 5,000. If you risk 1,000, you're going to make 50,000. So you see, this is how big players trade on the market. This issue of entering, coming out, entering, coming out, entering, coming out. That is a lack of it's because of a lack of understanding. It's all because of a lack of understanding. So because of a lack of understanding, you don't understand that institutions, when they move price from one major institutional level to the next institutional level. So even after it changes character like that, even if it starts fluctuating, right? Let's say the market starts fluctuating. You don't care about all of the fluctuations that the market will be doing, right? You don't care about all of that because you have made money initially here. You've made money initially there. You no longer care about all those manipulations that you find on the market. All you are now doing here, you're drawing a zone. Here I can see I have a fair value gap. I also have an order block right here. Fair value gap and order block. That's my first major zone because this one was mitigated. This one was mitigated. And I also have that one below there. So those are the two zones that I'm having, right? And our major level is up there. Up there, right? So I can see this. I can also see, let me see if I can see another zone. If ever there's any other zone. This is the a reasonable zone that I'm seeing here. Fair value gap order block like that. And also let's see also another zone. Right. Let me show you another zone. Another zone that they tapped onto. So even here, as they change this character, you know that they are now going targeting that high. All you're now doing is just following structure. Inducement, after they induce, you wait for them to tap into a zone. Once they tap into a zone, you wait for the lower time frame confirmation. Then you enter your buys targeting the swing leg up there. So they've targeted this or even that. So here they tapped into, let me draw the zone nicely here. They tapped into this fair value gap. That was the first fair value gap. The second one was here. Then a third zone was down there. So after tapping into a zone, you draw a zone, you identify where your inducement is. Your inducement is simply the last pullback. The last pullback in this case, someone could have said this, even this one, it was also one and the same thing, but this one was actually our inducement there. After taking out the inducement, then they dropped. So after taking out the inducement there, you could have even entered your sales from there because they had not tapped a zone there. You could have even sold from there, targeting down here. So after they tap down there, you can now go down to your lower time frames, your 4 hour, your 1 hour, your 30 minute, 15 minute. They are not going down there for mainly. Mainly is not the going down there is not really mainly for analysis. The honest telling you the honest truth. If you want me to tell you the honest truth, going down there, you're not going down there for analysis. There's too much noise there. You won't even see where the market is going and coming from clearly. There's a lot of noise. So here you can see that was a major change of character after taking one zone. Change of character there. After they changed that character, all you now need, for example, this was our supply. This was my last supply zone. Last supply zone, I can also see that I have a fair value gap right here. You could have marked the fair value gap as well as the supply like that. They tapped the fair value. So this was a sniper as well. Sniper entry as well here. Notice here I'm ignoring all these buys as if they are not even there. Not because they're not there, but because when the market is still in that zone where they haven't changed character, it will still be fluctuating to take out a lot of people. Many people will be taken out during that fluctuation. So here entering there, our target is up there. Because that's our swing leg up there. This change of character simply means we now have a lower low like this. A higher low, I mean, because we are going up. Because we are going up. If we are going up, our previous leg is this one. So that's a higher low, right? That's a higher leg. This one was our higher high. Our previous high was this one. Lower high, higher high there. So once we now have a higher low, we now target that high up there. You would have held this buy all the way up until they broke structure there. This was from 24 March up until July, March, April, May, June, July, 5 months. Imagine 5 months of holding one trade in your favor. 5 months of holding. This is the only way you can maximize on these setups. The only way you can ever maximize on these setups is if ever you apply what I'm telling you now. So go back to the daily, go back to the weekly, and make sure that you identify your zones. That's where your main analysis is always supposed to be. Once you come down to lower time frames, they carry a lot of noise. Their lower time frames are good for your entries. Use the lower time frames for your entries and use the high time frame for your main analysis. So this was the major target up there, right? Like this. So after this break of structure, the same thing, they come and induce before they continue. Where was the inducement? In this case, this was the inducement. After they induce, after they take out the inducement, it means they now have this as a higher high. That's the purpose of the inducement there. Then you identify a level below the inducement. The first supply is this one. Let's see if also there's another zone here. There's this supply. There's also this other one right here. So this was another supply that was below this one. So you would have drawn that and also drawn this. This one, the reason why it was taken out is simply one. They generated liquidity in form of equal laws. Equal laws, this law and this law and this law. These equal laws, even these ones. That was all liquidity. That's why they came and wiped that out. So even here they came and also generated a form of equal laws again. Even though it's not a perfect equal law here as well. That was all liquidity. That's why they wiped it out. So how do you know that they are going to wipe out? They usually wipe out before they come and take out that leg like that, like this. So this entry, you could have even used a Fibonacci as an extra confluence. Look at this. Near my 78.6, that's a dangerous zone. Dangerous sniper entry zone. Very, very high probability dangerous sniper entry zone. You would have simply entered your buy there. Stop loss below. Target, you could have targeted this. If you wanted to fully maximize, you target that higher time frame leg that we were anticipating. This was all the way from October to now. This is almost equal to almost 3 months as well. Here, I showed you that it's from March to July. March, April, May, June, July. That was 5 months. This is 3 months. This is how much? From October to November. This was almost 1 month there. So this is how you maximize. If ever you have seen anyone who holds a trade for more than a month, if ever you've seen anyone who holds a trade for more than a month, somewhere, somehow, they have this understanding that I'm giving you. Somewhere, somehow. So these are the major entries that you're supposed to take on US 30 for this whole year. For this whole year. January was around here. You would have taken some sales there, sales targeting the level there. You would have sold. That was the January entries up until March. March there, that's why the change of character tap into your zone. Then that's where you were supposed to take your buys there. In March, then imagine 4 months of holding. Even by the time they break structure, you're now just waiting for them to take out the inducement. You're now waiting for the next continuation. You can even ignore this from July, August, September, October. You can ignore this if you want, or if you can even take a lower risk. So what I usually do is when I'm taking these entries that are in line with order flow, for example, order flow is bullish. So if I'm taking the buys, obviously those are my aggressive entries. But if I'm taking the sells, those are just low risk entries. I can minimize the risk when I'm taking the counter trades like that. But these ones, those are the main major ones that you follow order flow, and you just increase your risk a little bit. So even this entry, if you go to lower time frames, the same way, once we tap into a zone, once we tap into a higher time frame zone, all you now need to do is go to your lower time frame. You can go to your lower time frame if you want, but this zone was actually a very small zone. So even after tapping the zone was very small. If you notice how I drew it, it was a very small zone. The first major zone was a very small zone there, which was worth if you refine it according to 4 hour, it was actually this, that because all the other supplies, if you look at 4 hour, that's why multi-time frame analysis is very important. So 4 hour, this one was mitigated. Here they also mitigated this imbalance. The only untapped zone was that that order block, that 4 hour order block. You see? So that one you could have even entered without even question. They tapping into this order block, giving you this rejection. You start entering. Stop loss below, just below there. This one, it was an entry with no questions. No questions. You were not even supposed to even go wait for anything on a lower 15-minute time frame, whatever. 1:25 risk to reward ratio. If you tightened your stop loss just a little higher, it's going to be 1:35, 1:40, 1:42. This one is 1:28. Look at the risk to reward ratios. Look at the risk to. So the same thing that I'm doing, that we're doing all the way from here, is the same thing now that we're looking at here. Internally, we are bullish like this, right? But externally, so here we broke structure externally like this. So this is our higher low according to external structure. Our higher low is this one, our swing higher low. So if we're going to keep on maintaining bullish order flow, let's look for external level zones. For example, I can see I have an external demand here. I have another one there. This one is liquidity here. This one is going to be used as liquidity. So those are the two major levels that I'm anticipating a pullback onto before a major continuation. So meaning once our confirmations are done up there, I'm expecting a pullback into one of these zones. Then we continue all the way up like this. So that's why I said January, as we are starting the new month, I'm anticipating reversal confirmations now. So those first reversal confirmations, they can happen within this internal order flow, right? So long this internal order flow is still respected, it's still fine. We'll still make money within that internal order flow, right? But once you see them changing that internal order flow, know that they're now coming to the external levels, which are those legs. So in this case, this one was mitigated. This supply was mitigated. We have a fair value gap there. We have another one there. So those two, those are of higher probability because they are mostly in a discount region. They are found in a discount region. If you put a Fibonacci from down here to the top, if this is going to be our top there, right? It means below the 50%, this one is our first, this one is our second. So those two will be our first major levels of target for TPs. So all you now need to see, for example, here the adjustment on the daily is this one. So how do you know that they're now coming down? They have to first take out that adjustment. So they can even come, take out the adjustment, give you maybe a slight pullback before they even continue like this. So they can even come in a wave up until the taper zone. If they want to keep on going up, they can even continue going up like this, break structure like that. Then once they now want to come down, they'll change character like this. Once they change character, they'll give you a major pullback before they continue down. Down there, they'll be targeting these swing legs up there. So they can even come as far as this level, this higher low. Once they come to this swing higher low and give you confirmation there, that's a sniper entry there. That's a sniper entry as well there. So this is my entire bias, my entire expectations now. It's very easy for someone who entered on correctly on these zones to even now wait for the confirmation to enter sales, to now wait for the solid confirmations. It's very easy. It's easier for them to wait. It's not easy for someone who was not entering these major entries for them to now wait there because they were not inside when they were supposed to be inside. So you realize that what makes an unprofitable trader is simply entering when they're not supposed to enter. So right now, it's still pushing bullish, still giving bullish pushes to the upside. Still giving me bullish pushes to the upside. It induced there. This was the previous leg, right? So those are all signs. Then after Previous leg there, broke structure here, went up, came down, went up, went up, went up, induced here, induced here. That's now my higher high there. So it's like this. That's a higher high because it's higher than the previous high, right? Which is around here. That's our higher low. So long they haven't taken out this. So up until once you see them taking out this, know that that reversal, it has begun. That reversal it has actually begun. All you now need is for a pullback into that supply before the drop down. See, drop down, you target the inducement as your first target, then that level as your second, then this one as your third, just going down like that, as I have been showing you. So, guys, I don't want to waste much time here. If you want to be part of our free Telegram community, the link is in my bio. Free WhatsApp, the link is in my bio as well. My WhatsApp number as well is in the description. If you have any questions concerning what I've been explaining, if you have any inquiries, or if you have any areas of clarity that you need clarity on, you can freely WhatsApp me in the number that is in the in the description below. So, guys, thank you for watching. This was an amazing time being here with you. I hope you got a thing or two from this powerful strategy that I call no manipulation strategy. You can't manipulate us here. Here, you can manipulate us here. Trend line traders, they were manipulated left, right, and center throughout. I can show you how they were manipulated throughout this entire movement down. Here, they could have drawn a trend line. Then after it's broken, they now think it's going up. The market kept on going up, going down. They draw another trend line. Then it's going up. Market kept on going down. They draw. So trend line traders, trend line. If all you know is trend lines, if all you know is trend lines, I feel for you because the manipulation that you're going to encounter, even in this new year that we are entering, they will manipulate you nicely, left, right, and center each and every single time. Here, trend line as well, broke the trend line but kept on going up. I can give you so many instances where they will break your trend line and even keep on going in the particular direction where they were going. Break your trend line, then they keep on going. Here, this was the trend line. Trend line, they broke it. Here, someone could have thought it's going down. They kept on going up. Someone could have thought it's now going down. They kept on going up. Someone could have drawn another trend line, this one. The break, someone would have thought it's going down, kept on going up, 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 wiping out all the stop losses above the trend line there. So, trend line traders alone, if all you know is trend line, if all you know is trend lines, broken, someone would have thought we're now going up. Going up where? So long as the structure is not broken, there is no going up there. So, guys, I hope this was so informative. I hope you gained a thing or two. Make sure you like the video, subscribe to the channel, and you comment in the comment section there. And you are part of our community as we are entering the new year. We want to make money together alongside with you. So, guys, thank you for watching. See you in the next video.